And the US has really done it this time. Once you see the CP cup here, it means that "Nah, I don't care anymore," and things are really going down. So sit back, pour yourself a stiff one. This is going to be a new segment going forward where I just talk, I just ramble on. You can just leave this on on play, go do your stuff, vacuum the floor, exercise, drive your car, and let's get on it, right? You guys, nothing's going to stop the February tariffs coming. We got to understand what's coming for the world economy. You know, we never thought that Trump would do it. We all speculated that he might, but he has really pulled the trigger this time. And he's not going after traditional adversaries like China or Russia. They are going after their own G7 allies. Right? We have literally smashed into the iceberg with this one. And it's really indicative of how countries, especially the G7, they're just too reliant on trade with the US. And seriously, what do you think was going to happen the moment Trump figured out that, hey, 60, 70, or 80% of your trade is relying on my economy, on the US consumer market, he's going to weaponize it, right? And Canada should really have known better about it. They have faced Trump's tariffs back in 2016. 2016 all the way to 2020, there was a lot of volatility. There was a lot of trade threats, and Canada should have really taken the time back then to diversify their supply chains, diversify the customer base away from the United States. And now, what do we see here? They're getting hit with a 25% tariff. And this is very damaging to the entire economy. A lot of trade, a lot of cars, a lot of materials, a lot of oil flows from Canada all the way to the US. So 25% tariff is enough to actually stop the flow of goods, right? Because it's not just the US consumer who have to pay the additional tax. They might actually move away from buying from Canada itself. The Canadians, exporters might be forced to eat the tariff. They might be forced to pull back and lower their pricing, which is going to damage a lot of jobs, a lot of industries back there. We have to understand that oil exports, most of it from Canada, goes to the United States as well. The infrastructure, the pipelines, the refineries, they're all set up with the main purpose of exporting oil, selling oil to the US at a big discount. So even at this moment, Canada, they're not getting the most amount of money, the most amount of revenue that they can get. And because the whole system is not geared to export to other countries that need oil and gas more, they're getting a very raw deal. I mean, look around the countries. Who really needs energy right now? It's Europe, because their economies, as we all know, is devoid of Russian gas, and their industries are deindustrializing. So they definitely need the energy. And for China, their economy is growing, so they need the oil exports. But Canada, well, they are trapped with the US for quite some time. Now you think about it, what's Canada gonna do? At this point of time, they're threatening dollar for dollar tariffs, but the most damaging thing they can do is to cut off oil and gas power to the United States. Now, if they do this, we can just imagine, one can imagine that the effects are going to be extremely horrible for both sides. For one, 90% of Canadian oil goes to the United States. I think it's maybe even 95 or 98%. And the effects will be tremendous. Oil and gas industries in Canada, well, they're going to get decimated. And in the United States, what's going to happen? Well, around 20 to 30% of their refining capacity is dependent on Canadian oil. So you can just imagine when you walk to the pumps to pump your gasoline, your diesel, if you're American, well, your costs are going to go up. We all heard that Trump, he's going to pump out oil, right? But here's the fact. Even if he wants to go after cheap shale oil, it's going to take anywhere from 6 months to a few years at the earliest for it to happen. And industries, big oil companies, they're going to do it under fire this time. They'll be drilling for oil as interest rates stay high and as inflation stays high as well. And do you think they can really accomplish it? So this state of affairs, this tariff war between the United States and Canada, they're going to destroy both economies here. Now, for Mexico, it gets a little nuanced. Now, as we know that Mexico is basically the southern manufacturing hub of the United States, right? They manufacture a lot of things for the US. A lot of gear, a lot of tractors from John Deere, for example, comes from Mexico. They build it there and then they ship it to the United States. Now, Trump, of course, is unhappy with this deal, right? He has been threatening John Deere, you got to make your stuff back in the United States or else we'll slap a big tariff with you. And now, with the 25% tariff, what Trump just declared to Mexico, what Trump just declared to the world is that we really want to reshore our industries back to the United States and we don't care about your economy. And how is this going to evolve, right? Is Trump really going to continue a 25% tariff for the next 4 years? Because if it does, it's going to jack up the cost of cars, it's going to jack up the cost of manufactured goods in the United States for the next 4 years. Or is he going to use this as a bargaining chip to Mexico, telling him, hey, we'll drop the tariffs, but we want you not to accept Chinese trade. We want you not to accept factories like BYD coming in. And if that happens, it's a very big question, right? Will the Mexicans fold? Will they bow down to the United States? Because one cannot underestimate the influence the US has in the Western Hemisphere. They're just above the Americans. I mean, they're just above the Mexicans. And because of this, they have a lot of influence that goes all the way back hundreds of years. And what are the Mexicans really going to do with this? Are they going to consolidate with China, which I think is the smarter move? But if they do it, they have to prepare for their industries, their economy to take a very big temporary hit, right? Chinese companies, they can always come in, they can always build more factories and export to the world from Mexico. And then Mexico more or less will become hand in hand with China to export to places like in Latin America, right? Let's not forget that countries including Brazil, Argentina, all these economies, they are growing very, very fast. And a lot of Chinese goods, a lot of BYD cars, they are being pushed out to Latin America. So it is very conceivable that Mexico rebounds the United States and joins hand with China to push back against the Americans. But will they? This is the very big question. And at this point of time, at least to me, it's really a big coin toss. But let's talk about the big fish here. What is China going to do? Because China, they export a ton of goods to the United States, over $500 billion. And this will undoubtedly drop. A 10% tariff, it really sounds small, but in certain goods, the margins are razor thin. So a 10% tariff is enough to eliminate the incentive of shipping goods to the United States. Now, obviously, the first order effects is going to be Americans, consumers, the US consumer, paying much more for their everyday lives. Now, there's a meme, which is not really a meme, it's a fact, that 70 to 90% of stuff in Walmart are made in China. So when you go grocery shopping, right, when you buy your new furniture, when you go buy even some foodstuffs, when you go buy plastic toys, the cost of all these are going to go up. Even Trump himself understands that you can't hammer China without severe repercussions, or else he wouldn't have just increased the tariff by additional 10%. He would have gone all the way to 60%. He would have gone all the way to 100%. It doesn't make sense unless you factor in this fear factor. If not, Trump would have at least imposed a 25% tariff on China as well. But by far, the worst effect for the United States is China building back their domestic consumption. This is just going to soar over time. And understand what this means, guys. If China decides to boost their own domestic consumption, a few things will need to happen. Well, firstly, China will need to stimulate their economy. And where do you think the money is going to come from, right? Now, China, they can always issue bonds, they can always borrow money from their own citizens and the world. But more likely than not, China, they are going to use their enormous amount of trade surplus that they've gained with trade from the United States, from the world. China earns around $1 trillion of trade surplus every single year. Now, with the 10% tariff, of course, this additional tax is going to drop the trade surplus from the United States. So maybe not 1 trillion is going to come next year, in the years to come. Maybe it's 800 billion, maybe it's 900 billion. But that's a lot of money that China will use to grow their own domestic consumption. China's already giving out a lot of vouchers to the citizens to spend. They're already having a lot of programs that you trade in your old stuff, we'll give you a new car, a new EV. And they're subsidizing a lot of the cost. Some it's even 5 to 20% of the entire EV cost in some cases. So the United States, they've effectively just shot themselves in the foot. And it's so bizarre that Trump can't really see the second order effects of this. Now, if China decides, yes, I'm going to use all my US dollars to boost the domestic consumption, what do you think is going to happen to the United States bond market? What do you think is going to happen to US bonds, US treasuries? China is definitely not going to fund their own containment. They're not going to take their money, their hard earned money, their trade surplus, and push it into US assets. Now, even if we take away the threat of the assets getting confiscated, like in Russia's case, China knows two things is going to happen right now. Firstly, the United States, they are going to debase their currency because this move of trying to reshore your industries to tariffs is not going to work. Trump is going to debase the currency even more. So China, by holding a lot of US bonds, they'll be losing a lot of purchasing power. And on the other hand, China is going to use these bonds, this money that they have, they're not going to US bonds, going to push it to the Belt Road projects. They're going to fund their own consumption. They're going to help raise the living standards of their own citizens. So, what the United States just confirmed is making China into a bigger consumption power. And if China controls the supply chains of the world, and if they are growing market, a growing consumer market, what does that do? It makes China into an even bigger global economic power. Now, for us, me and you, people like me living in Singapore, people like you, I don't know where you're from. Maybe you're living in Argentina, Brazil, Europe. Maybe you're in Japan. Maybe you're in Australia. What do you have to prepare for? A global currency crisis. The value of your currency is going to drop. And we need to understand why this is, why a US dollar shortage is probably going to come thanks to the tariffs. Now, we have to understand the mechanism, the black box of how everything works. Every country in the world today, yes, they conduct bilateral trade with each other. China conducts a lot of bilateral trade with Australia, Singapore, XYZ country, but that is not the majority of trade flows around. The US dollar today is still the dominant currency, and whether you like it or not, whether you think it's fair or not, it is the system that's happening today. Now, if the United States decides to impose a 10%, 20%, 60% tariff on imports coming in from other countries, what does it mean? It means that the United States will be spending less dollars outright not buying any products from these countries. So the flow of dollars from the US consumer is going to stop flowing to global economies out there. Exporters still get in less dollar revenue. And what does that do? In effect, that impoverishes countries around the world, not just of tax revenue, but of dollars as well. And when that happens, we are going to get a situation like what we are seeing, for example, in Europe, where the euro has been plunging. You can see it in Brazil, where the Brazilian real has been plunging. Australian dollar is also under enormous pressure as well. The yen is also collapsing. We could see this whole currency crisis in 2022 happen once again, which means local inflation is going to soar. Now, the entire system is built in such a way that every country today they owe each other a lot of debt that is denominated in USD. So they will have to find a way to get the money to pay off their bondholders, to pay off people, their own citizens who hold US dollar denominated debt. And the only way they can do it realistically is to sell off their own currency, go to the open market to buy up bunch of US dollars. And this will just send the dollar flying higher and weaken their currency. So it's a doom loop, and Trump he has just triggered that. Now, the long-term consequences of this going forward is extremely horrible for Trump. It's horrible for the United States. They might win this tariff war in the short term, in the next few months, years, maybe over the next 4 years as well. But what we're going to see is a big diversification with BRICS. They're going to go and band together with countries like China, who are the fastest growing economies, the BRICS nations. And where supply chains are concerned, China is very isolated compared to the United States. So they're not really that affected by tariffs at all, which will bring us to more de-dollarization. In the past, it used to be China going to other countries telling them, hey, something's going to happen to you. It's best that you ditch dollars and you trade with us using your local currency. We'll take Singapore dollars, we'll take Australian dollars, and we'll pay or we'll buy in the Chinese yuan, whatever the case of the arrangement is. And now what Trump just did is to confirm the Chinese alarm bells, right? Trump just told the world that, hey, China is right. China is right about that. And if we could do things to people, our neighbors like Mexico and Canada, what do you think we are going to do to you? So I think going forward, we are going to live in a world that's extremely bifurcated, guys. I mean, especially when it comes to investing, we could really see less incentive to buy US assets in the long term. Now, short term, a lot of people might actually pile into the US markets because they're all scrambling for dollars, right? And once you get a big pile of dollars, what do? You buy into US assets. But in the long term, as countries decide to decouple more from the United States, the consumer market, they'll build up their own consumer base, they'll build up their own stock markets, especially when it comes to China. So, what Trump just did is really cripple the future of the US economy. Now, it sounds strong, I get it. Make America great again, build America back better, whatever symbol, whatever catchphrase you want to use. But going forward, I don't think this is a very good idea. So I wish everyone here really happy end to the Lunar New Year season. And as February starts, don't really be surprised if things gets worse, right? I mean, it's 4 years of the Trump administration, but it could last for much longer than that.